Yo, what is up, everybody? Happy Monday. Hope you had a great weekend. Welcome to PreMarket Prep. Spencer Israel. I got Joy Elconin. I got Dennis Dick. And we got a show. We got a lot to discuss. We got to talk about crypto is making a run. Crypto's green for the year. First time we can say that in a while since the first day of the year. We'll talk about that. We'll talk about Tesla. Maybe another stock split coming for Tesla? Question mark. We'll talk about that. No Tim Quast today. He's a little under the weather, so he'll join us if he can later in the week or perhaps next week. So you got it. Me, Joel, Dennis, maybe Mitch will stop in for a few. That's your show. Smash the like. Here we go.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Joel, good morning. How was your weekend?
Oh, my weekend was excellent. I can fill you guys in a minute or two. Did a new sports activity, of course, which I was very good at. All right, let's run things down. And we're higher. We're at 8.5 handles higher. Had a little dip overnight. No big deal. Bought the dip. Trading over the highs from last week. So good Friday, closing on the highs, follow through on Monday. Can't complain about that. Crude in the tank, down 647, 107.44. Gold in the red, $23 at 19.31. Silver in the red by 45 cents, 25.16. Bitcoin, the old overnight move, up 28.85, 47.540. Clearing that resistance at 45.5, the big move. Kind of felt that creeping up at the end of last week. And Ethereum futures, they're up $242 at 33.69.50. Let's bring in Triple D. How you doing?
What's going on? Talk to me.
Well, I got Lisa wanted us to try a family sport, a new sport.
What'd you play?
Pickleball.
Oh, I love pickleball.
I've never even heard of
Oh,
pickleball.
it's
What
so
the hell
much
is
fun.
pickleball?
I love pickleball, Joel. We should play pickleball.
What's
I
pickleball?
love that game.
What is it?
I would say
I'll tell you, it's tennis
Go
for
ahead.
It's tennis for old people.
Exactly.
That's what it is.
Oh.
It's the
It
most.
is.
It's the most fun thing ever.
It is.
So
like
that'd be good for
tennis.
me too.
Yeah.
Yeah. Tennis,
Yeah.
you got to run and run and run and, pick up the balls. They're going all over the place. Well, this is a little bit smaller rackets. It's like a wiffle ball, right, is what you use. And the rules are kind of similar. Tennis players aren't necessarily great at it. Oh, look at this. Who brought that? Yeah. And the rules are a little bit complicated, but of course, with my ping pong experience,
Of course.
yeah,
Is that you playing, Joel?
That's Joel. Yeah.
You look good.
I was trying to put spin on it and everything, and
Spin
so
button.
Emily and I beat Dana and Lisa.
Nice.
I felt bad because I was making, I was putting it like right over the net, and Lisa had to run, almost ran and knocked the net off a few times. But that's it. But let's go to the markets, and boy, oh boy, market won't go down.
No, it won't. I mean, and this is
down.
it. Like what my logic says, you got to sell stocks. My logic has been wrong, and it's been wrong for a week. So what have I been doing? I've been buying dips. I got to go with not what I think, but what the market is telling me what is happening here. So, am I going and throwing all my cash back in the market? No, but as a trader right now, I got to be on the bull train. I mean, you cannot argue with it. It will switch. It doesn't make any logical sense, but logic is, we go into logical markets, and now we're back into like FOMO. And we've been talking about this for a week now. The FOMO is rampant. When you see stocks like GME blasting off 5 days ago, That's telling you it's the FOMO market. And it was just a matter of time before crypto starts to catch on too, because it's all related. All the stuff that was really cool in 2020 was so uncool for the whole first part of this year. It's cool again in the last week. It's been cool again the last 7 days. So you have to respect that. Am I putting all this stuff in my long-term portfolio? No, but am I trading some of this stuff from the long side? Absolutely. So that's the difference between, trading. You don't trade what you think, you trade what the market's telling you to trade. And my thinking has been wrong, but my trading has actually been pretty good. So, I mean, that's the difference between, somebody who's just starting that thinks you got to call the market to make money. You don't call the market to make money, you play your systems. You play your systems and trade what your systems are telling you to trade and go with the flow. And right now, buy the dip is working again. And it's working very well on a lot of beaten down names.
So it's interesting that this morning we get a big crypto run, right? Like over the weekend, right? Because all cryptos are up. If you look at your movers tool in Benzinga Pro, it's all populated by all the crypto stocks. Are all up the top of the leaderboard today. We've always talked about Bitcoin crypto trading as a growth asset. It trades with growth, and when growth is on, Bitcoin is on, crypto's on, and when growth is off, crypto is off now. So now you've had a period where for the last couple of weeks here in stocks, we've rallied. Crypto really hasn't. It's been a little bit more hit or miss. It has rallied, but we haven't had like the breakout. Today we're getting the breakout, right? Today I mentioned the fact that we are green for the year now.
Catch-up trade
in Bitcoin. So is this a sign of the how I guess like what does this say? Does it say that we're already moving into the later phases of whatever this move is? If we're at the point now where, well, let's see, we already had the cannabis move that was last week and that's done, and now we're moving.
Yeah, it's going through.
So the next big asset, which is crypto, we're going to run through that for a couple of days, and then that'll be that, and then we'll be back to selling stuff. Or does it mean like, okay, all right, now crypto's here, now we got some legs?
I think it's the latter to a certain extent. I mean, this market is your classic climbing the wall of worry. There's like 5-6 basic market, environments that you're in overall. You could write a book and probably there's like 4 or 5. And one is climbing the wall of worry, where it ignores all bad news and just continues to go up. We entered that phase 8 days ago. Didn't know it until, hindsight capital's 2020. But there was no way to, if you're picking it on day one, you were probably way too early because you were probably picking it 30 days ago or 50 days ago or 100 days ago. But we're like 8-9 days into this now, and the market has now shrugging off Ukraine, as disgusting as that is. It totally is. It's shrugging off, interest rate concerns here, which I don't think are warranted, but it doesn't matter what I think. It matters what the market is doing. And it's shrugging off, a potential for not a soft landing. So there's a lot of reasons to be worried. There's a lot of reasons to carry cash. But right now, the market is punishing those people who are underinvested. I'm one of them. It's punishing those people who are short stocks. I'm glad I'm not one of those. And it's going to continue to punish those people until we actually shake those people out. And then it'll probably pull the rug out from under the longs too. Market loves to punish the maximum amount of participants. But right now, it's the classic strategies and the classic environment of climbing the wall of worry.
I heard the bear market is over, is what I heard.
It's official. Cramer has declared on Friday, which this scares the hell out of me. But Cramer has declared officially that the bear market is over. He was on CNBC. He says, I'm calling it now. The bear market is over. He could be right. He's usually sometimes not right. So I'm somewhat worried about when Cramer starts getting bullish. So maybe I actually should get fully back on the bear train here. But regardless of the points, is Cramer always makes good points, and there's a lot of reasons to think that maybe the worst is behind us. Maybe it is all priced in. Every money manager comes on CNBC and they're telling us about the interest rates. It's already priced in. Is it? I'll tell you one thing I know is that nobody knows anything. This market, to predict this market is one of the hardest markets I've seen in my 22 years. One, because we are so headline driven. To predict it, not to predict it 5 minutes out. The 5 minutes is where, or the 10 minutes out, or the hour out, going with the flow. The day trading is still predictable. But to say where we're going to be in a week, in a month, in a year is completely impossible. So it's just a guess. And we don't know what the next stage is in Ukraine. We don't know how, this economy is going to shake out. We don't know if we're going to get a soft landing. We don't know if interest rates are going to, go up for, quicker or slower than what the Fed is predicting. So all we know is nobody knows anything. Very hard to predict out more than a day. So anybody who's saying, yeah, where the bear market is over or this, it's just, talk. It's something to grab headlines. That's all it is, because nobody knows anything.
Yeah, and X-Trader in the chat just said, what about balance sheet runoff? Well, that's the point, right? What about that? What about this? What about the war?
Lots of worries.
What about the Fed? There's yes, there are things, the same things that we were freaking out about a month ago. Nothing has worked itself out. So, but that doesn't
nothing. That's the funny thing.
That doesn't mean we can't keep going back to all-time highs here. So
that's the funny thing, Spencer. That's the whole thing, is that all the things we were worried about, none of that got fixed. We just stopped worrying about it.
Yeah, I don't know.
We just stopped worrying about it.
I don't know.
So it's tough. I don't know where we're going. And that's why I have an over amount of cash in my long-term portfolio, because I don't know. But you can't argue. You can't sit here and say, I'm going to short stocks, because you're getting your ass kicked if you're shorting stocks. You're shorting stocks a week ago, you're killed. You're shorting stocks even on Friday, you're starting to get beat again. I mean, Berkshire Hathaway shows you the market that we're in. You got Apple trading down here, and we'll go into this now. This is a good segue. It's trading down.
Before you do that, I just
Joel.
Go on the under, just to underscore the unpredictability.
Yeah,
I think that the session started at 6:00, right? 6 p.m. and there's a lot of things that go on, and I think that there's discernible patterns at night. You see some things in the morning, morning rallies or morning declines. But what to me is become absolutely unpredictable and non-tradable is the last 15 minutes, the last half hour. I mean, on Friday, you were up flirting with the highs of the session. You slammed down 20 handles, and it's like, okay, well, people are nervous, right? And then in the last 5 minutes, they take it all the way back to the high of the session and close on not only on the high of the day, but for the high of the week. So there's certain points in the day where your probability, your numbers, your levels work. What I've just noticed is that the last 10-15 minutes are wicked. And if you would have went all in with that, say, wow, what a strong close, I'm buying the open at 6:00, then you would have gotten smoked, right? Because you had a decent sell off. But there is a lot of predictability. It's not like, well, we come in high overnight, we consolidate a little bit, and then we go higher all day, and then kind of close where we open, and then come in higher overnight, do the same kind of thing. I just think that, especially if you're a newer trader or you're not having a good day by 3:30, 3:40, just be very careful, because some of those moves are just wicked moves, and they don't necessarily give you follow through in the exact same direction the following day. So don't always want to be going with it. Hard to be the contrarian too, but just note that in the last half hour of the session.
Let's go to one of the stories of the day, and it's not like Tesla is the story of the day, but I'm going to bring you to Apple first, because we're on this 9-day winning streak in Apple. As of right now, it looks like that streak could end. There's a headline here. Spencer, talk to us about Apple.
Yeah, Nikkei Asia reporting that Apple is looking to cut its iPhone SE production by 20% next quarter. This is according to Nikkei Asia, so unconfirmed report here. A direct result of the war and how that is impacting global supply chains. But they're saying that Apple will cut production. It's actually not just their iPhone. It's the iPhone and the AirPods. But we know the AirPods is ancillary. The iPhone is what matters here.
I don't know. Like the streak, this has been an incredible move for Apple. One of the biggest moves that it's had in a long time on non-news related. Just the little double bottom at 150, and we have not looked back. And it has come right into resistance. It has come right into, like, if you come in now, way late to the party for sure. But I mean, you've got shorts caught in this. You know, you've got the argument that it's going to put a V bottom and we're going to eventually take off here again. Does the dip get bought today? I'm not buying the dip. I'm long the stock. It's the largest position in my long-term portfolio still, despite me lightening it up. I don't know what to say, though. This streak has been incredible.
Yeah, well, it looks like 171. You got a little sloppy there when the news came out. So you have the pre-market low coming in at one. Let me get the exact number here. The pre-market low coming in at 170.73. That coincides nicely with do we have another daily low? 170.21. You already got a $2 bounce off that level, so maybe if you want to get in on the cheap, you could look for there. Like I said, really $2 away. But just also historically, tagging Apple off these kind of announcements, right? With over the years, probably has not been the best move, right?
It's always been a good idea to buy Apple on the dips. I mean, that is really what has worked. It worked again, 10 days ago. The question is this a dip after you just had such a run? I don't know. It's been another one that, I don't think it's warranted that it should be trading where it is. But what I think doesn't matter. It's what the market is doing is what matters. So does dip get bought? Probably initially. Does there eventually a fallout here? Is it late to the party? It's all of those things. So I'm probably not coming here and buying the dip and loading up and saying we're making new all-time highs, but I'm not going to argue with you if you are because it's been working.
Maybe wait for it like you had a nice double bottom, right? On when we reverse, maybe maybe it
At least
be
if you're
Friday's
shorting, wait for a double top.
Yeah, yeah, something
wait
to
for
lean
a
on.
reason for a reversal here. So, but I mean, I just wanted to go to Berkshire Hathaway here too. I mean, you can just tell how disconnected everything is right now. I mean, at Berk is
up again this morning.
I know. This is it. Berkshire Hathaway is up huge this morning. It owns half Apple. That makes absolutely no sense, but it's not an ETF. If Berk was an ETF, it would be down because you'd obviously have the creation redemption that would bring it in. But it's not the case, and it doesn't matter that it's half Apple and then Apple is down because they just want to buy Berkshire Hathaway no matter what. It's what this market is. It's like Warren wins no matter what. It's been disconnected from its holdings for quite some time. Obviously, getting the gap bigger between NAV and its actual holdings. We went through this exercise and showed that the majority of the top holdings are significantly lower than their all-time highs, yet Berkshire makes a new all-time high every single day. So that shows you those closed-end funds can kind of go where they want to go. And right now, Berkshire Hathaway doesn't even care that Apple is down today, which is absurd. If we were going back even 6 months ago, I was trading Berkshire Hathaway off of Apple because it would lead it. We were even showing the charts how Apple and Berkshire Hathaway were starting to become correlated. That is broken down because right now this market thinks Warren Buffett knows how to navigate this environment better than anybody else, and they continue to buy just because of Warren Buffett.
I don't know if that's what it's saying. I think it's probably saying this is a safe asset, and we it's a safe asset with growth because it's got Apple.
True.
So I don't think the market is saying, oh yeah, Warren knows what. No, it's just it's like, what can we buy
that's safe,
that is simultaneously safe and correlated and tech, and it's Berkshire.
Well, I think some of the anticipation is that he's going to make another big move and another really large purchase, and he's been tipping his hand as to what that is.
Yeah, that's true. He bought the Allegheny deal was last week, but that's not
what I'm talking about.
Qualify as a big purchase. You're right.
No,
you're right.
You know what I'm talking about, right, Dennis?
No.
Oxy.
Well, he's already bought a huge chunk of Oxy. You think he could take the whole company?
Yep.
It's possible. I mean, he's got the cash to do a lot of things that he wants to do. So,
yep. And that will be his last hurrah.
Taking Occidental. How much market cap on Oxy, by the way? Let's look that up quick, Spence.
Yeah.
I read
And how
it.
much cash? Berkshire has a lot of cash
It's
right now.
Yeah.
Do we know the cash hoard in Berkshire?
It's a $55 billion company.
What's a cash hoard in Berkshire right now?
I think it's 150.
I think you're right, Joel.
We've got 88 here.
Yeah. Anyways, he's got the cash to do it. I wouldn't surprise me. I mean, he's in a little bit of a buying spree. We know he's been accumulating Oxy. So it wouldn't surprise me. How much percentage does he own of Oxy already? Do we know that?
Is it 14%?
Oh, it's a little.
He owns a chunk of that.
It just changed, so I can look right now. I want to say. Wait. I'm sorry. Well, the question was how much of Berkshire is Oxy, or how much is of Oxy does he
How
own?
much of the Oxy does he own?
Oh shoot, I don't know.
Percentage-wise, I don't know if you have that.
Yeah. I'm gonna. Oh yeah, good call, Joel. It's like 14%. Very good.
It's a good chunk.
Yeah. Yeah. So it would be that would be a big deal. That will qualify for sure.
Yeah.
One thing we neglected to mention, not that it's moving the stock this morning, but Apple did win Best Picture last night. So shout out to Apple for being the first.
I heard there was some fireworks there last night.
First
too.
streaming service to win a Best Picture Oscar. Of course, that's not what the people care about, though. The people don't care about who won the awards. The people care about the fighting. But we can get to that later if we have time.
What was there fighting? What was happening?
You didn't hear about this, Dennis?
Well, I didn't see it. I heard just a little bit. But so what happened?
The question of the day is nothing to do with stocks or anything like that. The question of the day is, was the slap real? I guess I could just replay what happened.
Will Smith, they just showed it on CNBC too. So he went up there and
he gets up there,
him in the face.
Will Smith goes up there.
You got it?
Boom! Slap. Did you see it? You see?
What did he say to warrant that?
Here, ready? Here, ready? You gotta watch.
Let's see if he actually see if this is WWE.
They made contact. He swung.
That's
through.
WWE. He never touched him. Look how he ducked. I know my WWE. He never touched him.
He must have really said something offside.
Because he doesn't even go back to that. Who agrees with me? That's WWE. He never touched him.
So here's why I think
he never touched him. Fake.
He never touched him.
Calling a deep fake right there. I think.
Oh yeah, look at the Mitch knows that move.
I think it's fake.
Can we do one more time?
I'm calling it fake as well.
Yeah, here we go.
One more time.
I'm with you. Fake. Fake.
Okay. Okay, so I think we have to watch the aftermath because that's how you know it's real. Because it was so incredibly awkward that
awkwardness was fake too.
I don't think so.
I've been thinking about this for 10 seconds now. I've given it some deep thought, and I think it was fake.
Okay.
Then he sat down. He said something about his wife, right?
Yes, he made a joke because Will Smith's wife has alopecia, so she shaved her head. So he made a joke about her being in G.I. Jane because G.I. Jane shaved the head and all that.
Maybe it was real then. That was a pretty low blow.
And
I'm changing my mind after 20 seconds of thought.
Oh, Dennis, just like you're trading.
It's like my trading. I changed my opinion more than anything.
That's it right there.
That's why I'm pretty good at trading. I changed my opinion on it. Bing, bing. I changed my opinion again.
Yeah. Anyway, let's actually talk about Tesla today.
Well, just two movies. I mean, I did see Coda, and that was a great movie.
It? I still haven't seen it yet.
And that was an Apple production. Who did that? Apple, because you said Apple.
Yeah. Coda was Apple. Yep.
That was a great movie. And I was also on the plane. I saw King Richard.
That was very good, right?
And I thought he did it. Yeah. I thought he did an incredible job acting in that. So I'm a big movie goer.
All right, here we are.
All right. Anyways,
let's go. Let's get back on track and talk about Tesla here. This is interesting. So Tesla announced that the board has approved the potential for the company to authorize new shares. Now that idea goes to a shareholder vote. Shareholders can vote now whether to authorize new shares of the company to essentially allow Tesla to do another stock split. Is the implication here, right? So what would happen if this goes through is Tesla would issue new shares. It would not be dilutive because they would give those shares to the shareholders and to maintain their current stake. and then just split the stock off of that. So, yeah. I should also mention that Tesla is suspending production at their Shanghai factory because of COVID.
Yeah.
But that's
The
not-
financial engineering trumps that.
Yeah, apparently so.
Joel, there were 3 days of consolidation for Tesla. Now you get the positive headline. Everybody's going to be talking about it all day. Is there going to be another stock split? It's hard to just come in here and say, I'm going to short up 61 when you know it's going to be talked about on CNBC 100 times today. So I don't know what to say. Even this is just this is an unbelievable comeback from how many days ago? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days ago, we had 756. Today, we're 1,070. Where the stock's up 50%, almost 40% in 10 trading sessions. This is incredible move for a market cap that size.
What do you got? You got a pair of highs at this is called 11.15. Current pre-market high is 10.80. So if I was long this, well, I am long this, but I'm not looking to sell it.
Joel, you're a genius on that Tesla long. I'll tell you that.
Just don't sell.
Just don't
11.15. Don't sell. Don't get freaked out. Don't try and time the market.
We need to have the course on Joel Elconin, the diamond hands course.
Yeah.
Called Joel
11.15.
Diamond hands.
You got to get through 10.80 and then 11.15 and then, make a look at all time. I don't understand why he's splitting stock. I mean, it's, just
to make
did
the
it a couple
stock price
years.
go higher. That's why.
Okay.
That's what it does.
That is what it does. That's
what it does.
Yeah.
Makes the stock price go higher.
Yeah.
Okay. I don't care.
Yeah, it creates
it
creates an incentive for people to want to go out and buy the stock now.
Yep.
Because people think, oh, like if I buy the stock now before the record date or whatever it is, I will get these shares for free. That's not actually how it works, obviously, but people think that, oh, it's just like with dividends, right?
People like getting more shares.
Might think like, oh, if I buy it now, I get a dividend. But it comes out of the price of the stock, so it's not free money, but it creates an incentive for people to want to go out and buy the stock.
I don't think it will go the same as last time. The way.
Remind me, how expensive was Tesla? Was it like it was
a crazy move. It was absolutely ridiculous what it did.
The run we had off the split.
Yeah.
The S&P ad too. So you had the S&P ad, which was just that was the crazier move. It went from like 400 to I think it closed at like 690. It went up like 75% off the S&P ad, which, in the course of, I don't know, a month or two before the ad happened, which was incredible in itself. And then the split too. It had the double. The financial engineering, and not S&P ad, but the stuff that's not really to do with company fundamentals has really driven the price. I mean, S&P ad, other stocks split again. There's been a huge driver from stuff that's absolutely nothing to do with the company.
When was that? Was that during this run here? I mean, because I think this is when they announced the stock split.
Yeah, maybe.
Yeah. When was it, or was it earlier? Let me see. This is 21.
Well, we had the 690. Yeah, 2020.
It seemed to me it was August. Wasn't it more in August when they made the initial announcement? August of last year?
Yes.
Okay.
No, it wasn't. It wasn't last year. It was 2 years.
2020.
It was 2 years ago. I know. Time flies when you're having fun, Joel. Right?
That's it.
They did it during the pandemic, huh?
Yeah, Apple and Tesla both did. 2020.
It's been an incredible move. I'm not sticking Tesla in my long-term portfolio here, but it's been the right move all the time. I've been wrong about Tesla for a long time. Next.
Yep. Okay, bunch of other stocks moving today. Where should we start? Let's start with C Limited. This is a like an Asian e-commerce play. They have a subsidiary business in India that there's an e-commerce company called Shopee that they're shutting down. They're basically just getting out of the Indian e-commerce market. They announced. So and also I should note that Kathy bought some of this on Friday. Bought 150,000 shares of this stock on Friday, but so she likes it. But anyway, the reason it's down today is because they're pulling out of the Indian e-commerce market.
What a fall from grace here. I mean, this stock was one that just would not stop going up. It was going up every single day. I felt like for years, like for real, and it was for years. It was like from 2019 went from $13 to $50, and then 2020 went from 50 to like 200, and then 2020 went from 200 to almost 400. And then they give a whole chunk of it back here. I mean, do people come in and buy this dip on SE? Maybe. I don't know, but the trend is not your friend. Absolutely not your friend on this one. There's a lot of stocks that are trying to like make new highs and breaking out, and this is going the opposite direction. I don't follow the story closely enough. It's been a fun one to trade, but I don't follow closely enough to get a feel for whether I should be coming in and buying the 7% dip or not.
Let's see. We'll do it easy. We'll make it easy.
Make it easy. I like easy.
Okay. 85, right? To 132.
Sure.
Right? So 32 and 15 is what? 47?
Yeah.
Half of 47, 24. So yeah, that 95.
You're getting in there.
109, yeah.
You're coming into the 50%
if
right now.
you want to buy this stock,
Yeah.
this is where you do it, and then you lean on that's if you feel like you missed the move, and this is a buy the dip opportunity, and who knows? Another one that we looked at, and I actually did an article on this, and I couldn't believe what a buy the dip opportunity. Did you see Coupa Software after it?
Coupa?
No.
Did you see Coupa?
No, we did. I didn't.
Look at Coupa.
After the earnings, yeah.
Oh, wow. It came all the way back.
Yeah.
All the way back.
All the way back. Wow.
Yeah.
Hadn't noticed that.
They've been buying all growth in the last 10 days, but now you're going to start to, at this point, start to get separation again, where there's going to be some that are going to continue to go, and there's going to be some that are going to continue to leak. So it's been like everything moving together, but as you get this consolidation period here, and as you get maybe the VIX coming down, it becomes more selective. So it's not as easy going to just say, I'm going to buy because it's growth. So
yeah.
Very, very, again, all of these charts are tough here because they've had big moves in both directions. So you're like, okay, well, where do I, you come in here on a stock, like we were talking Tesla, but go to the one, what were we just talking about? I'm already forgetting. Stock before Coupa.
SE.
Yeah, SE.
Yeah.
I mean, you come in here and you think, okay, well, I'll buy the dip, but where are you stopping yourself out? I mean, the low of the move's 85. I'm not taking it down to 85. That's way too big of a, too much risk. So, you go 108 and say, I want to see it respond quickly. I want to see the open at the low or open near the low and buy it right up where buy the dippers come in. I got to see a whole triple digits. But sometimes you see it go down, take you out, go down 99, undercut it. And then all of a sudden we're back up at 107. It's like, shake everybody out. Tough market.
Other big mover of the day, we do have a deal to announce, or that's been announced, I should say. HP Inc. is buying Plantronics, ticker Poly, POLY, for $40 a share in cash. That gives Plantronics an enterprise value of about $3.3 billion. Wow. So that stock was halted. It has since come out of the halt, and it was gone up to near that takeout price. HPQ is your takeover stock, your company. The
stock has been running too. Yeah. I mean, getting close to that $40 level, which you got to think there's some size up there near 40. It's peeling back off that with the takeover. Again, this isn't a stock deal, so you don't have the ARBs coming in here and shorting HPQ and buying POLY, so you don't have that dynamic. But they're just hitting it just because they, there's a premium pay and they typically knock the premium off the stock. POLY is nothing to say. It's $38.95. It's $1 down. So risk ARBs are giving it $1 just for the time value of money.
Yep. All right. So that's your big gainer, Poly. Let me go through my list here. There's a couple other movers. We covered Sonos. Sorry, this is a big game today. SONO. Sonos being added to the S&P Small Cap 600 Index. So up 10%, 9.5%, whatever, off of this. This stock is still my sworn enemy. But
why?
Because of the day when the Sonos debacle. This company, not the stock, the company. The company is my sworn enemy. For this.
What is the Sonos debacle?
Remember when I came in like a month ago? I came into the office.
Oh, yeah. And all the lights.
Yeah, the music. Yeah.
All the music. You couldn't get the music off. So you
get the music off.
Stock now.
Yeah.
You hate the company, not the stock.
I hate the company.
I'm kind of ticked off on myself. I actually wanted to buy this. I looked at this at 22, 23 a couple of times back in January and then came back down there, and I've been wanting to buy SONO for the simple reason is one, I don't think valuation's crazy. Two, we've had Andrew Left on the show about a year ago, and he thought eventually somebody's going to buy this company. And the stock obviously run significantly for a long time after that, maybe a year and a half ago. It ran up into the 40s after that. I think it was around $17 or $18 when he said that. We've come up full circle. We've come back down to those like value area on SONO. So I kind of like it, but now I've missed it again. Now it's getting added to the S&P. What was it getting added to? S&P what?
The S&P small cap
The small cap?
600.
The small cap 600.
Hey.
And when's that supposed to take place?
Oh, throw me under the bus. I don't know.
No, sorry. I don't know. I mean,
right now, Joel.
Yeah, this very second. No, I don't have.
I mean, someone that really doesn't care is trading out of this at 29. You know, they're just like, hey, this is a little bonus. I don't care. It's going.
They're usually selling opportunities when they're getting added to the indexes.
And then, besides that, if they mop up that seller, and people think it's
your date. I got your date for you. It'll be effective as of Wednesday morning.
Okay,
fairly soon.
Yeah.
So I'd also that same seller at 29.74. That was another high. So just kind of the top of the trading range that you've been at too for most of the year.
So $30 looks like resistance. I mean, it's had a big move. I'm not coming in and buying it here now. I missed it.
I wouldn't buy it because it's being added. And then if I owned it and it was getting a pop for this, I'd sell it. I don't
me too.
care.
I'm with
going
you.
Into
hey, same side.
Who cares?
Same side.
Here's what and what index is it coming out of? Right?
I don't think.
Is it? What if it comes out of index and everyone has to sell it?
Sometimes you see those dynamics with stocks going. It's a good point, but this isn't the case here. But sometimes you see a stock going into the S&P 500. It'll become such a small component in the S&P 500 when it's coming from a bigger component. You actually have a net sell happen. That's how sometimes stocks that are added to the S&P 500 can actually go down. This is not the case here. This is getting added in the 600. It's probably, it's not the case here.
Yeah.
So stock getting lifted. Just to mention too, people might be waiting for Tim. Tim is
under the weather or something. He emailed us late last night. He couldn't come on today. He said he caught a bug late last week. So Tim will be on next week, but not today because he's under the weather, unfortunately. So we'll get if we can swing it, we can maybe get him on potentially later on in the week, but he's out sick here today. That said, we do have Money Mitch here who's going to hop on in a second. But Dennis, were you going to say something before I brought up Sonos? Were you going to say something, or was that what you were going to say?
I have 6-second goldfish memory.
I feel like you had something to add. It was about a stock or something, and I interrupted you. But all right, whatever. Let's bring on Money Mitch. Let's see what he has to say. Mitch doesn't join the show very often. I know he's here back.
It's been a while. He's always hiding in the background, though.
It's been a minute. Where is
he? There?
There he is. There he is.
What's up?
What's going on, guys? How we doing?
Going on? Talk some rational thought to me here, because I am been on the wrong side of this trade for a bit here, obviously for the last 10 days as the market continues to climb the wall of worry here. How is Money Mitch approaching this market?
So there's two things really. I mean, one thing I've been watching, of course, the market breadth changing. I can tell you right now, at least the SMA 50, those numbers have really started to point towards the upside. They're above 50%, and I think this is an important change to notice. This is the short term using that SMA 50 and noticing that, yes, some stocks, of course, took off from oversold territories. Now we're getting into overbought territory. And so I'm wondering if we're getting towards a point in time where we've just extended far enough, and now we're going to start seeing some retracement. So that's my concern. Now, the big thing, of course, I'm watching is the SMA 200 and those numbers. If we take a look this morning, I want to give us updated numbers here. So if we take a look, we're at right now 34.3% of stocks are below the SMA 200. 65.7% are below the SMA 200. 34.3 are above. Watch that number. If it gets to 40, that's really where I'm going to flip to the bull, because that would be the flip where I could start seeing majority of stocks go bullish. If majority of stocks are bullish and leading the run, then I could see this market turn into a bull market again. Now, that's the real concern for me. You're getting a battle between the SMA 50 and the SMA 200. For me, I think you got to watch right now the Treasury Yields. I think that's in the forefront of a lot of investors. The 2 compared towards the 10. If we take a look this morning, we're moving closer and closer. The 2-year is at 2.3, and the 30-year right now is at 2.6. So that inversion is getting closer and closer to happen, where that could predict a recession.
Yeah,
That's
not just that
concern.
too. That's good too, but also the 5 and the 30 just inverted today for the first time in since 2006. So yes, bond yields are reverting. That also is considered a recession indicator. But of course,
why do we keep going up?
That's the question.
That's the question. Well, if I take a look,
punish the shorts.
Well, I'm going to give a little bit more on the bearish thesis here.
Okay.
So my idea is, if you take a look here at energy and utilities, look how utilities is really taking off. I think this has to do all with that inflation that's coming. If there's anything that I think you're going to see take off the most, I think it's in utilities. Stocks like Duke, if you see these charts, they've been just taking off. I'll go to the dailies so you can really see that reaction. Look at Duke, look at SRE, look at NEE. They're all getting really strong. I'm going to be watching these to see if they can continue. But I mean, we see energy just taking off and oil just keep going higher and higher. I just don't see how you can't continue to raise rates, and if anything, at a faster pace.
I think there is a point to that. I mean, you got the markets. If they were worried about market knocking it down, I mean, the market's telling you we can take a faster pace. So 50 is on the table. I mean, for the next meeting. What are the odds? Do you know, Spencer, for the next meeting? Is it like, I mean, we know where they're going to go. What's the odds?
Odds?
Well, the odds.
You have that table going. Do you have that table still going?
Yeah, I have it in front of me right now. So
I think Mitch is right. I think we could go 50 at the next one.
Yeah, the odds of a 50-point hike are so right now we're at a quarter point, yes?
Yeah.
So the odds of a 50-point hike,
odds of going another 50.
The odds of a 50 basis point hike at the May meeting, that's the next meeting is in May, is 71%.
Oh, so it's already priced.
That's the odds of a 50-point hike. The odds of a 25-point hike is the remainder of that. So it's a 29% odds of that happening. But majority seems to be thinking we are going a half point on May 4th.
Yeah. So, I mean, my biggest concern is not about being bear, but just pointing towards the economical factors that are out there. And it doesn't point towards the upside. Yeah. I don't see GDP going big into the green. So I don't see how some people say that the economy is going to get hot. Are going to start ripping later on in the quarters. So I think right now, everything points to higher inflation, rates going up. If anything, I think in the long run, you're going to start seeing the job market slow down. And so I just don't see it. And until then, I'll stay with the market breadth. I'm going to watch that SMA 200. And if that can go above the 40%, then I can start getting bullish based on the market breadth itself than the economical factors.
It's a tough market. I mean, everything you say, I agree with. And I want to be bearish. I want to like come in here and start shorting stocks here. But then I'm like,
that's dangerous.
I try to do that, I'm getting my butt kicked, Mitch. I'm getting my butt kicked.
I mean, you're not the only one. I did take some profit multiple times in Tesla short side through that 1,000, but it didn't want to hold. You can see that at least.
And now you get Tesla a positive headline, and boom, you're going through the 1,000. And now you're looking and thinking about all-time highs.
You're not shorting Tesla.
It's a tough market.
It's impossible to win. A couple of months ago, like 2 months ago, I had a conversation with a family member, and she was like, "I have some cash to invest, and Spencer, just deal with this." And I did nothing. I've done nothing, and I felt like a genius, and now I feel like a schmuck because I feel like a genius 2 weeks ago. And I was like, I had done nothing with this with her money. And now I am 2 weeks later. And I'm like, damn it, I didn't do anything. Stupid.
No, we're all saying the same thing. we're all saying the same thing. I felt like a genius all the way down, saying, "Yeah, I'm sitting with cash. I've got all this cash." I'm like, "This is, this has been the call." And all of a sudden, it's like, boom, boom. 10 days later, we're getting all the losses back in Apple and 3/4 of the losses back in Tesla, and I'm like, I missed it. I somehow totally missed the bottom. I'm thinking it now too, and I'm like, why? I'm like, nothing has changed, but you know what? It doesn't matter.
Yeah, I think one thing to point at is that in the chat you're going to see everybody say both sides, right? I mean, the top and the bottom. I think the biggest thing I think in there is trying to be flexible. There's going to be days where the market is going to rally significant and you're going to be able to make some great profit. That's why I've been day trading a little bit more. It's because there's intraday momentum. But what we haven't seen this consistency in the momentum. And I think that's what's creating the FOMO that Dennis keeps bringing up also.
I've got it a bit too.
Who doesn't?
Who doesn't? It's a good point. You're like 50% cash and you're like, missing out. I got a little fear of missing out happening here.
And I think you just got to take advantage of short-term momentum now. Long-term momentum, of course, you can always take an approach of averaging in. That has probably not been bad for a lot of investors this year. If you just kind of averaged in on those retraces of the SPY, I'm sure you got in at a good average. So that's the way I would approach it, is if you're looking long-term, just try to look at, dollar cost averaging down, SPY goes down, let's say 5-10%. You take some shots. I think that's a good way of approaching it. Like always, it's not financial advice. The way that I'm thinking about it, because I think that not having any skin in the game long term, of course, isn't always the best, right? I mean, we know that by statistics, but it's definitely a dangerous game to play right now.
Yeah, and that's why, even though I've been fully on the bear train for months now, I didn't go 100% cash for that reason. Because what if I'm wrong, and then everybody else, market starts blasting off without you? But 50% is a sizable position. And I'm still sitting at 50% cash.
The idea that you are even talking about 100% cash when inflation's at 9%.
Well, you can't. That's exactly it. That's why you can't go 100% cash, because everything's getting, going up around you. Prices of everything are going up. Yeah. So you can try to time it and say, okay, eventually prices are going to start coming down for certain things, but we haven't seen it happen. Hey. We can talk about demand destruction, but we haven't really seen it happen yet. We can predict and say, well, if people are spending more at the pumps and spending more on food and they're spending more on housing, that eventually they're going to have less money to spend on everything else. But it really hasn't materialized in any of the numbers yet. So, logic says that makes sense, but the numbers haven't really shown that yet.
I think you haven't even begun to see inflation yet. I really do. And that's why I'm concerned.
We've begun to see inflation, I think. I mean,
I hope it doesn't
get over $4. I would say
we haven't seen the effects of the Russian-Ukraine war at our pumps yet. Wait till you see that effect.
What?
You haven't seen it yet.
I feel like we have.
It's been over $4.
April's coming, guys. From everything that I point to and how right now is in this end of the month is the exchange of what everyone's talking about it right now. Russia's asking for rubles in exchange for their gas. Everyone's trying to pay in euros. There's a battle right now that's going to go on for that supply. Who's going to get it? What's going to happen there? Watch in April. I think you're going to start seeing barrels, at least the price for oil, go to 150. So just be careful out there, guys.
All right.
I'm scared. I hope we're not going to see $150 oil, because I was already, I filled up my F-150 this weekend, and I felt a little bit like it got to $200 Canadian. I was like, I got to stop. I'm not even full yet, but I just can't even stomach putting over $200 in gas into my pickup. So I don't want to see $150 barrel of oil. Maybe we got to go all electric. Maybe this is the argument for Tesla and all the EVs, because these pump prices keep going the way they are. People are going to be like, I need an electric car.
I don't know. I was at Costco yesterday, and you wouldn't know it. It was packed. So
you're not seeing any demand destruction where you're going either yet.
No,
not yet.
No.
Not yet.
So, all right.
Fun discussion. Nobody knows. None of us know.
When in doubt, dollar cost average. That was a takeaway from this.
That's not bad.
Yeah.
It's not a bad.
Honestly, that would be my tip too.
Not a bad
I
strategy.
need to get
You can't
better
time
at it.
it. You can't time it. You can only play along. You can't time it. That's what Joel thinks.
But you can time your day trades, and you can time the moves, and that's where my bread and butter has been for 22 years is the short-term trading and trying to feel out the short term. And right now, it's hard to argue with the bull train. It is working. My long-term account stays 50% cash, but my short-term account is biased long. And you just got, there's just been, unless we get that headline and we can turn it in a hurry. But there is some setups here happening that we're looking tired. Like even look, you can look at some of the automotive stocks. They're starting to look a little bit exhausted. We've had a big move, bounce back, and like General Motors and Ford, they've bounced back off the lows. Not a big move, but Toyota's had a big move. TM. I talked about this one on Friday. I think this one actually sets up from the short side because you've got the big move, TM, 2 to 13, down all the way to $150 was the overshoot. But now you've had like almost the 50% bounce back, right into resistance, tidy little double top from the last couple days, which was what me and Elconin like to look at. I kind of like TM from the short side.
Not quite at the 50.
Didn't quite get there?
Yeah, I mean, 215. I don't know where these autos are going. I mean, and this one is especially a little bit, harder to trade being the secondary market here. But I see a pair of highs just over 180, trading 179.20, but just small candles. I don't know. Not looking at it from the long side or the short side. Just kind of looks quiet.
I think there's an opportunity to lighten some of these stocks up.
Mm-hmm.
And I think the think is the whole problem here because I stop myself almost when I start thinking too much. And, you go down Mitch and everything he says makes perfect sense. And you think, why in the hell am I owning any automotives? Why in the hell, an EV does make some sense here, but we're going to $150 barrel. And I don't know if that's the case, but let's just say scenario analysis. You got to be dumping the airlines into this rally. You got to be dumping. If you think that, look at the airlines, the bounce back we have had in the airlines is nothing short of incredible. I mean, American Airlines a week and a half ago was $12. It's 17, Joel. We're right back up. Yet, to get the pump prices, and don't kid yourself, this is hurting the airlines. It's going to cost them. It's almost like they're in the perfect storm spot. If you think, and if this is only the bare thesis, but if you think there's demand destruction potentially happening, people are going to have less money. They're going to have less trips. If people are going to have, higher pump, if the gas prices and oil is going up, that's going to hit the airlines two directions. One, supply, or one is obviously the cost of fuel, and then two is that their demand for the product for flying around is going to go down. So if you think you're going to $150 oil barrel per barrel, you got to be dumping the airlines as fast as you possibly can into this rally because this rally has been vicious. And I'm not saying that's what I think, but if you think oil is going higher, the airline rally is a gift.
Well, let's just take a look at the oil market, and you're looking at the May, right? And the May is trading at 108, right? So what's that? That's CLK. Let's look at the CLM22. Come on, CLM22. There's your June. Your June is trading below your May. And then if you go all the way out to December, CLZ22. The future markets are not predicting the $150,
Not at this time, nope.
Nope, not right now. Not right now. But if this was inverted, and the front months were each higher, then I would say that the higher the probability of it. If you think that oil is, going to be at that level, I'd be going out to the farther months and seeing what happens. What I think I know that I did a little writing up when Mark Fisher, I believe his name was. He was on CNBC, and he really moved the oil market. I think where the big money in the oil market's being made is the guys that are trading the spreads. between the different months. They're not
There's always money
loading
made
up.
there.
Yeah,
There's
they're
always
not.
been money made there.
Yep, the crack spread is called, and there's another one too against heating oil. So you're laying off some of your risk, and I think that's the way. If if you want to trade it long term, that's probably the best way to go. If you got the account size and the margin
One
size.
thing I can say, and to sum up this show for the most part, is that this is a very confusing market right now because it seems like it should, the logic says, yeah, you got to sell this, but the market's telling you no. So, I mean, you're really at odds with what you think and what you should be doing. So this could all change, and the way it would change from a macro perspective is if we do get a ceasefire, everything would change. Oil would implode, everything would look a hell of a lot different. I mean, the inflation problem probably doesn't go away in that case, but that would change everything. So there is a path to understanding why we could potentially approach all-time highs, and that would be the ceasefire. But maybe this market just continues to climb a wall of worry anyways, because it's just focused on the North American markets, which were coming out of a pandemic, and people still want to go and do things. Like it's busy. You're going down. My one friend just came back from Jamaica. It's busy down there. I mean, people are doing stuff right now. So whether they be doing stuff in 6 months, it's hard to say. But right now, this market is looking like it wants to continue to climb that wall of worry.
Just before we go, I wanted to mention the cannabis stocks briefly because the bill is set to go for a vote in the House of Representatives today. It will probably pass, but if you've ever needed proof that cannabis is just a sell the rip kind of a market, at least in the stocks are. Well, let this be your proof. If the first 10 times didn't do it for you, I love cannabis. I'm bullish cannabis, but I mean this thing is going to get to a vote today. It's going to pass the House. It may get stonewalled in the Senate, but all these stocks have all been leaking. They leaked after hours on Friday. They're leaking again this morning. They're leaking into this vote is the bottom line.
Yeah,
and they will probably continue to leak. I wish it wasn't the case, but that's the case. That's the market.
Profit taking into these. A lot of these stocks, Tilray has went from 3 days ago was $5.69, $7 got up to $8.56. You're talking about moves of 60-70% in 2 or 3 days. These are big moves. CGC, Canopy Growth up from $6, $7, so not as much, but still significant moves. All of these stocks have rallied 10 to 20% in the last few days. People are booking the gains.
Yeah, so that is what it is, honestly. And then Bitfarms had earnings this morning. It's good. This is interesting, BITF, because great earnings report, up with crypto at large, but has been leaking here. Their sales year over year went from 11 million last year in the same quarter to almost 60 million in the quarter they just reported. So huge year over year sales growth for Bitfarms. They're mining a lot. They mined almost 3,500 Bitcoin last year at an average cost of just over $8,000. It was a good report, and the stock is going to move with Bitcoin at large, but it has been leaking throughout the pre-market session. What else did I want to mention?
I mean, to me, this is a pretty classic setup. Yeah, you did. Usually when I see something retract that much from the pre-market high, you're thinking, can I get it at a gap fill? Can I get it at the top of Friday's range? Not only was the top of Friday's range at the $4 area, you were up in there 4 or 5 times in the last few sessions. So giving you an opportunity after being higher, if you want to take a shot here at the $4 area, I wouldn't, fall in love with it. I mean, it's a lower price stock, so I don't know how much risk reward you got. But there's also a pair of lows at or 4 lows, 5 lows at 360, 370. So those buyers need to step up to 4 and see if you can get a rally here in Bitfarms.
Yeah.
LTD. That's, to me, old. Will that old resistance be new support?
Again, it just matters the crypto price. So the Bitcoin is going to drive
Yep.
it all. If you look at all these things, you can pair trade them all together. They all look the same. Mara, Riot, Hive. Bitfarms, they're all similar charts. So it's Bitcoin price that drives it. Bitcoin's obviously up today, so you're seeing, that relief pop here in a lot of these things. A lot of these things are oversold as well, even though they've had a rally in the last 7 or 8 days. I mean, look at Mara. I mean, the stock was $83. It's $28 now, $30 this morning with the rally. So it's like, what a rally! Well, not if you bought this thing 6 months ago. So they're still oversold, even though they're overbought maybe in the last week. Overall, these things are still oversold, and that's why there's vicious short squeeze in a lot of these names.
Here's your calendar for the week for earnings. Pretty light. Chewy tomorrow, Micron tomorrow, RH, Walgreens later in the week, but Lulu is the big one probably as well. But
Sure.
Light week on earnings front. All right, that'll be a wrap for us here today. We got to hop over to live trading with Benzinga. So everyone smash that like button. And we'll see you over there. Joel, I'll catch you later. Dennis, good luck today. Everyone, smash the like, subscribe on YouTube, join the YouTube membership. Check out Benzinga Pro, pro.benzinga.com. Free 2-week trial for everyone. And check out the link in the description to the FinTwit 2022 conference that Benzinga is co-sponsoring about a month and a half from now, May 13th and 14th in Vegas. I'll be there. You'll be there. Get a discount on your ticket using the link and the code in the description of this video. Check it out there. As always, please remember that all the information from our show is meant to be used as informational purposes, not for investing or trading advice. That's a wrap. We're done. We're ending the show now, going over to live trading with Mitch, Zunaid, and Ryan. Everyone, good luck at the open. Let's go make some money.